Everywhere you look, people are complaining about million-dollar HDB flats. On TikTok, content creators are saying bye-bye to this expensive flats, not bye-bye. On Mothership, people are complaining about the affordability of flats. On YouTube, viewers are calling it ridiculous and a joke for a record-setting 1.25 million four-room flat at Bidadari. All this points to the perspective that Singapore property has gone crazy and that our country is becoming too expensive to live in. But here's the thing I've been saying in my past videos, and I know this might surprise some of you, because a million-dollar HDB flat is actually not the most dangerous thing happening in the market right now. In fact, once you look closely at who's buying these flats and how they're financing them, you realize that these buyers are not really overstretching themselves. They tend to have solid incomes, stable jobs, healthy CPF balances, and very strong financial stability. So while everyone is loudly complaining about million-dollar resale flats, something else is creeping up quietly in another part of the market. Well, not that quietly you frequently see such news, because to me, that's where the real risk is building. And really, not that many people talk about it. Is it because it makes people uncomfortable, especially those who are already planning to buy this segment? Or is it because the marketing is done so well that people don't see the reality anymore? Well, if you're wondering what segment I am referring to, I'm talking about new launch private property. So this video is not about defending high HDB prices, but about pointing out that the real bubble, if I can even call it that, is happening in the private new launch segment, where people are paying 2,500, 3,000, even 3,500 per square feet for units that cost 2.5 to 4 million. They are stretching their loans to the maximum, they are betting that our property prices will never come down, and they are relying heavily on rental income that may not even materialize. As you already know, million-dollar HDB flats were once a rarity in the past. But over the last few years, the numbers have grown and grown pretty fast. In 2021, we had about 259 $1 million transactions. In 2022, it crossed 370. In 2023, it was 470. By 2024, the number crossed 1,000. And in 2025, by Q3, the figure is already 1,235. But here's what people forget. There are over 1 million HDB flats in Singapore, nearly 1.2 million in fact. So even if we see 1,200 $1 million transactions in a year, it's still well around 0.1% of all flats. In fact, even if we compare that to only HDB resale transactions, which HDB projects to be 28,000 by the end of 2025, million-dollar flats still account for only around 4% of the total, which is not considered dangerously high yet. And even though million-dollar flats don't only exist in central areas anymore, I mean, we can find them in OCR towns like Sengkang, Pasir Ris, Condos, and even Yishun today. Though this belongs to the huge EA and jumbo flats. The people who buy these flats are not financially unstable. They are typically dual-income families with strong CPF contributions, and many of them often take smaller loans because they are proceeds from the previous flat, or they just pay in full from the profits they made from their condo sale. But let's still discuss how unaffordable or affordable a 1.2 million HDB flat is today. Even if the couple pay a rather low 350,000 down payment using cash and CPF from their previous flat, that leaves them an 850,000 HDB loan. At the HDB loan rate of 2.6%, the monthly installment works out to be around 3,400 per month. For a dual income couple earning a combined income of 14,000, they don't even have to touch cash as they can fully pay this amount via CPF. Is it expensive? Yes. But is it risky? I think it's manageable because families who buy million-dollar flats aren't investors, so they are not looking to make passive income from rental. Anyway, they can't, at least for the first 5 years. From those buyers of such flats I know that invest in such a big sum for HDB flat because they love the location, they enjoy the space of the flat or the view. And they almost won't think of how much the flat will make when they sell them later. They are buying them to stay. And even if one spouse loses their job, the other spouse's CPF contribution can still cover at least 50% of the mortgage. And even if they need to dip into their cash savings for a few months, most families at this income level have the buffer. This is why I'm saying the million-dollar HDB buyers are not the ones living dangerously, but those who buy 3 million condos. Now, before we address this other group, there are two things I need to address. First, if you haven't, can you subscribe to my channel, especially if you support my views, or at least like to watch these videos? I mean, if you don't already know, I don't like to hype up the property market like many others. What I share is really my opinions of what I observe, even though my views would cause me potential buyers to avoid working with me. Or worse, my counterparts in the property industry to be wary of me. So would you at least give this video a like if you are still watching to this point? Done? Thank you very much. Going to the second thing, which is a lot more serious. I think we need to look at the global picture for a moment, especially when the world is becoming a very unpredictable place. And I believe this is something not enough buyers consider. In the past weeks alone, we saw Bitcoin crashing from its highs by 30% as at the time of this shoot, wiping out more than $1 trillion of paper wealth and causing tens of thousands of retail speculators their life fortune. Altcoins, which typically move inversely to Bitcoin, didn't rally as expected. Correspondingly, stocks dipped sharply. Analysts say they have never seen the S&P index reverse their gains like this in a single day on 20th November, even when Nvidia's positive earnings report and the US Fed's announcement of the rate cut should be seen as a positive signal. It's clear that investors' confidence is hugely shaken. More bad news for the past few months. Japan's yen has been extremely volatile. The US and China relationship remains tense, especially with all the tick-for-tack export restrictions. And now, Japan and China are having a bit of a tiff, sending Chinese tourists flocking away. The Russia-Ukraine war hasn't ended, and interest rates in many countries remain high, slowing down global spending and investment. Specific to property outlook, Australia, Canada, and parts of Europe have seen property prices soften or correct. And China's property crash this year in every state has driven many property owners who make purchases at a high with no exit avenues at all. While I don't claim to know a lot about the global economy, but when I see so many signs pointing to a shaky, even turbulent future, I would assume that people like me would normally become more conservative with that. But I don't know why. To those people who are flocking to the showrooms in the past weeks alone, do they see things differently than the rest? Or they believe that Singapore, especially for our real estate market, is immune to the influence of the world economics? That somehow foreigners would still flock to Singapore to buy up our property when the whole world is crumbling? Or perhaps they think that our domestic market is enough to sustain, even raise property prices indefinitely, that somehow the 3,500 per square feet condo will be bought by another rich Singaporean for 4,000 per square feet 5 years later, and the cycle will continue somehow. Therefore, is this why buyers are still pushing themselves into such multi-million dollar purchases? Or maybe marketing has really been done so well that these buyers aren't considering the possibility that property prices would fall. I give you an idea how risky it is to buy such expensive new launches. So today, when you walk into a show flat today, it's very normal to see units selling for 2,500 to 3,500 per square feet, even for OCR launches. So take a typical 1,000 square feet 3-bedroom unit at 3,000 per square feet. That's 3 million. Let's say the buyer puts down 750,000 in down payment. This leaves a 2.25 million loan. At a bank loan interest rate of 3%, the monthly installment is around 9,500 to 10,000. With the maximum of CPF contribution of 3,400, that leaves a monthly cash outlay of 6,500. Now I suppose, when these buyers reach the showroom, they will be told, don't worry, you can rent it out. The renter can help cover the installment. But how realistic is this? A 1,000 square feet 3-bedroom apartment isn't exactly the type of housing an expat family will rent for 10,000 a month. They rather go for a bigger 2,500 square feet condo for the space, even if it's older. So realistically, if the unit rents for 6,000 a month, which arguably is already high for a small 3-bedroom, the owner is still short by around 3,500 to 4,000 a month, unless the plan is to just cover the cash outlay. And regardless, we are assuming that the unit is rented out immediately with zero vacancy. But what if the unit stays empty for 2 months, especially when 400 to 500 units are all vying for the same pool of tenants? What if the market softens and tenants are unwilling to pay high rents for smaller layouts? What if the rental market dips even further? In reality, most tenants today are very price sensitive, and like I say, 6,000 to 7,000 rents are usually paid for larger apartments, not small new launch condos like we have today. Certainly if they aren't located at good locations. The real danger is People are buying 3 million condos believing rental will cover everything. But the math simply doesn't match up. Oh, and I forgot to mention this. Unlike HDB loans, which allow more flexibility, bank loans can become very stressful if your cash flow suddenly changes. Let me also say something that might upset some of my own industry friends, but it needs to be said. There are advocates out there who are telling everyone to upgrade, to buy bigger, to leverage more, to take good debt because property prices always go up. Some even position themselves as wealth advisors, but the truth is their advice works only in a perfect economy when nothing goes wrong. And then there are property investment gurus who charge thousands of dollars for seminars where they encourage participants to put their life savings into overseas properties they've never seen. Industrial units with 20-year leases left, commercial units in strata title developments with uncertain rental demand, and other properties with risks they don't fully understand. In fact, I myself don't even understand too. These trainers will say it's passive income, financial freedom, wealth stacking. But for many of the people attending these seminars, the risk is far greater than the reward. And with a purchase that's potentially 6 or 7 figure, one wrong move can set you back permanently. And who's the ultimate winner in these purchases? Yes, the one who collects the commissions and the markups. Let me tell you something I haven't told many people before. My hubby and I have gone for many of these workshops and courses. And let's just say that we are still bleeding from the advices of these so-called gurus. And learning from my own mistakes, this is why I always tell my clients, buy within your means. Buy for stability. Buy for lifestyle. Buy for your family. And not for someone else's sales pitch. There are hundreds of other things to invest in. And while property is admittedly a lot more stable than other instruments, it is extremely illiquid. And I'll leave you with this saying that I've mentioned in one of my previous videos. 头没有这么大，不要戴这么大的帽. Meaning, if you don't have such a big head, don't wear such a big hat. So, if you're watching this video and you have been considering to buy a $1 million HDB, a resale condo, or even a 3 million new launch, all I can advise is, if you feel pressured by whoever is advocating you to pull the trigger, do talk to another person for a second opinion. I may not be the most expert consultant in my field, but if you prefer a clearer and calmer person to chat with, you can consider reaching out to me. Ask any of the viewers who contacted me in the past months. I'm confident that none of them felt I pressured them into doing anything. In fact, I even told a few not to do the things they want, foregoing even my opportunity to make a quick commission from them. So, send me a comment below or WhatsApp me privately. I read every message, but oftentimes I choose not to reply to everyone, especially some comments here. Anyway, don't forget to like and share this video with your loved ones. Do subscribe to my channel too, okay? Regardless, remember that property isn't as safe haven as it was anymore. You really don't have to do what others are doing for the fear of missing out. There are always safer and smarter choices. You just need the right second opinion.